What is real? How do you define real?
You can't jump into cash. Cash is trash. What do? You get out.
Stephan Livera is a co-founder of Ministry of Nodes, a partner at Bitcoiner Ventures, and is the host of the Stephan Livera podcast, which focuses on educational interviews about the economics and technology of Bitcoin. Stephan has interviewed many high-profile Bitcoin, libertarian, Austrian economics, and macro guests, including Jack Dorsey, the CEO of Twitter and Square, Ron Paul, Dr. Adam Back, the CEO of Blockstream and a cryptographer cited in the Bitcoin white paper, Andreas Antonopoulos, the world-famous Bitcoin educator and speaker, Jameson Lopp, the CTO of CASA, Jeff Deist, president of the Mises Institute, Guido Holzman, Saifedean Ammous, author of the Bitcoin Standard, Lynn Alden, Preston Pish, Plan B, the quant and author behind the stock-to-flow model, and Michael Saylor, the CEO of MicroStrategy and the GigaChad. As the host of Stephan Livera podcast, he delivers the sharpest and tightest hour via every episode that are all packed with the highest signal-to-noise ratio in the Bitcoin space. Stephan Livera, welcome to the Bitcoin Matrix podcast. How are you?
Hey, thank you. Thanks for inviting me.
Yeah, man, this is awesome. I'm so happy to have you here. I've always enjoyed your podcast. It's definitely, for me, on the pedestal of my journey into Bitcoin. Not the right pedestal, just the path. And I kind of came up with your show, maybe a few months after you started publishing it, maybe, but I went back to the beginning and just followed along. I've always just been a big fan. Like I said, you got the best hour in the space. So how are things going in Sydney these days?
Well, things are mostly opening up here in Sydney, but there is still a bit of drama in terms of this interstate drama. So like Queensland and Victoria and things with restrictions and like, it's stupid. Like now, even if you want to go down to Victoria, we have to apply for a permit and it's all this just ridiculous stuff. And then there's all the chatter about, mandatory vaccines and whatever. And there's that debate going on, and we're still banned technically from leaving. So you have to apply for an exemption to leave your own country. I'm a taxpayer here, and I have to, ask for permission to leave, basically, which is a joke as far as I'm concerned. But all things considered, things are opening up. The thought or the way people are viewing lockdowns and all of the associated stuff is coming down. So I think that's kind of been really on my mind over these last few months, as obviously it's such a grave intrusion into our liberty. But on the positive side, Bitcoin is doing really well. There's a lot of advancement in that world. We're seeing, a lot of big companies come in, and I guess it's interesting to just kind of see the narrative shift and see all these like billionaires and famous people and everyone just start talking about Bitcoin. And now we're getting more interest. Even for me as an organizer of Bitcoin Sydney, we're starting to see more people come to our meetups again. So there's a whole bunch of those things. And then even in the whole in the more technical world, there's all this debate and discussion firing around about how to activate Taproot. So it's an exciting time.
Yeah, I have a tremendous affinity for Australia. I got to spend a month there when I was 25. I was backpacking. I did a month in Fiji, a month in Australia, and a month in New Zealand. I did Sydney up to Cairns, and I loved it. I think Sydney is one of my favorite cities in the world. So I was watching you on the Toxic Happy Hour, and you mentioned that you got into Austrian economics at 15 years old. And I'm curious, so what brings you to economics, or any kind of economics at 15, much less Austrian economics? And what do you think about this thread that kind of became a lifelong journey? What struck you at 15? What did you think you would get out of keeping up with, and gaining more and more knowledge in this field?
Yeah, so for me at that time, I didn't even really when you're younger, obviously you're just not as smart or not as kind of well considered about some of these things. for me, it was more like I mean, I've told some of this stuff on other podcasts and things. Probably ironically enough, I don't think I've actually told this story on my own podcast. But anyway, I was hanging out in some IRC channels, and I was on this Oz Politics IRC channel. And so, yeah, so some of the guys in there were linking to Mises Daily articles back then. So when I was, 15. And back then I just thought it was kind of crazy stuff because it was sort of talking about, some of the articles are talking about this idea of anarcho-capitalism, and that to me was like, whoa, what is this?
Mhm.
Well, I don't have any idea, because up until then it was I had no exposure at all to libertarian ideas. And so the Mises Institute was more, it was just like it was just a different way of looking at things. And I was learning economics in school and things like that. So I guess I was just interested in it because I think it was just one of those things where you just intellectually find it an interesting thing to read and learn about. And I wouldn't say I was, a dyed-in-the-wool Austrian from 15 years old. It was more like I was slowly exposing myself to those ideas by reading Mises Daily and some of these other different articles and things, and then slowly started reading the books, and then later sort of found that it just made so much more sense than the kind of more Keynesian stuff they were teaching me in school. And so over time, I just shifted more in that direction. And so I was reading a whole bunch of different things related to free market economics, right? Like trying to understand, like, for example, things like what Milton Friedman was saying and things like that. And ultimately, I think the Austrian framework just made the most sense to me. It was the most cohesive. It just that sort of deductive, logical way of breaking it down, to me, just made so much more sense. It just aligned more with how I was viewing the world. And I think for most people, and this is a classic in the Austrian, I guess, amongst Austrians, when if you ask, hey, what's the good first book to read? It's Economics in One Lesson by Henry Hazlitt. Now, that book, oh, there you go. You've got it right there. So, yeah, look, that's a great first book. And then I guess that sort of is a good indicator to make you start thinking about the seen and the unseen. And in fairness, that book, maybe it's not actually Austrian, it's more just economics in general. You have to think in those terms. And then later, as you go into more the Austrian school, it's kind of going into more understanding, okay, it's more about the marginal cost. It's more about subjective, valuation. And there's more of an appreciation for things coming in a bottom-up, spontaneous way. And so I think that helps prime us to understand what Bitcoin is.
Right. Yeah. I think what's interesting is then, I mean, you were obviously business minded. You become a chartered accountant, I think was your kind of your career out of university. And I'm wondering, what kind of, how did you reconcile accounting with Austrian economics? And part of my question there is, I'm also an accountant by trade. And I think I grew up wanting to be in finance. And I think the more I thought about investment banking, I found more economic principles, I think, in accounting. But even I don't think accountants are appreciated in the US as much as, say, the finance, and the investment bankers are. But I've heard and gathered that overseas, they're more appreciated there. So I'm not sure how that fit into, why you might have become an accountant and how you reconciled that with your view of Austrian economics.
Yeah, so for me, yes, I became a chartered accountant after university doing accounting and finance. And so for me, the Austrian economics was just like, it was my personal interest on the side, obviously. I wasn't getting paid to do it or anything.
Right.
It was just a side thing for me. And I think that's a common thing, right? There's a lot of people out there who are, whatever career they are, that they're also into Austrian economics, right? Even like Dr. Ron Paul, right? He's a medical doctor.
Right.
So in terms of professions and things, I worked as an internal auditor and doing like risk, those kinds of jobs, that kind of work, starting at Deloitte in Australia. So I was in the Sydney office back in those days when I started. So most of my career, pre all this Bitcoin stuff was in internal audit and risk type roles. And so I just found that interesting, just kind of as a good opportunity to sort of see so many different parts of the business. I thought that would always be a really interesting thing. So I was, yeah, so I was there at Deloitte, and then later on I was at Commonwealth Bank of Australia, then at Macquarie Bank. So I was basically in some financial services, doing internal audit and risk sort of work, but having a chartered accountant qualification because that's like a typical thing basically anyone in the Big Four does, right? And so, yeah, generally it is a relatively, it's not like super high paid, but it's like a reasonably well paid job in Australia is, having these kind of accounting roles. Although everything's kind of becoming modernized, but then it's more about how do you use those tools and use the modern tools in your accounting world. But yeah, for me, it was just always, I was always interested in Austrian economics from a young age and technology. I was always just like really interested in like learning about the technology of it. And so I think that really primed me in that sense to appreciate Bitcoin because I already had those libertarian values and I was already, I guess, primed in that way to go and learn more about these things rather than to just ignore it like most people do.
Right. Yeah, you were definitely primed. When do you think, and I know you've talked about this on other podcasts, but so, you kind of touch Bitcoin maybe in 2011, 2012, or it touches you in some way, you come across it, maybe on these IRC channels or Slashdot, and you come across it again via, maybe 2012 on Family Holiday. But what do you think about that arc that made it more, and I'm assuming here that it went from maybe technology to something about economics, hard money, and libertarianism?
Of course, yeah. So up until like most people growing up, we were playing games and seeing like virtual world money and things like that, like whatever RuneScape and those different games, right? And so when I first heard about Bitcoin, and I can't remember exactly when, right? Like this is like my first touch point where I had just ignored it, right? I can't remember if this is like 2011 or 2012, maybe 2012, like a Slashdot article or something. And maybe you come across this article and you're kind of like, oh, what is this Bitcoin thing? Oh, isn't that just like, some Fortnite dollars or, just some virtual world money? Like no one had put it in terms of like, whoa, hold up. There's actually a real implication of this. It could really change the world, blah, 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 all those. So for me, that was why I discarded it the first time I came across it, because I just thought it was just some stupid thing. No one had kind of, grabbed me and shook me by my shirt and said, hey, wake up. This is a real thing. You could actually do something real with this. This could be a real, really important technology for the whole world. And that moment for me was the Eric Voorhees article that I read in late 2012. And then from then on, it was just like I couldn't stop thinking about Bitcoin and talking about Bitcoin. And, from then on, it was just, that was it. I just went, deep down the rabbit hole and trying to learn everything I could about Bitcoin and, following Bitcoin talk forums and Bitcoin Reddit back then, because Bitcoin Twitter was very small back then. It was like tiny. There just weren't that many people on Bitcoin Twitter. It was not a thing. But funnily enough, that was actually where I met Pierre. So Bitcoin Twitter back in like maybe 2013 or 14 days. And Pierre was, he was more of an accountant then. He actually hadn't gone and done as much of the software development stuff, which he did, later on. And it was funny because we had a funny connection in that way because we both were working at Deloitte. Although he was obviously in one of the American offices, I was in the Sydney office. But I think he and I saw a lot of things similarly. And so that's how we became, Pierre and Michael Goldstein are some of my oldest, Bitcoin friends in the space. So yeah, that's kind of that's kind of how it played out for me.
Yeah. And then how did you get to podcasting? Just in terms of, was it to just find more information for yourself? Was it, did you always have some sort of, a desire to be an educator as well?
I was frustrated. So sometimes it's like a scratch your own itch thing. I was so annoyed because at the time I started, it was just shitcoin shilling, blockchain use cases, and it was basically one of three things. It was either, shitcoin shilling, it was blockchain use cases, or it was very high level media coverage that never really went into any good level of detail, and so any coverage would, in the mainstream media would be things like, oh, look at this guy who lives in like a tree house and he's like wearing this weird animal outfit, and they would be like, yeah, see, this is crypto. It's like this guy who lives in his tree house with this weird furry whatever thing. And so to me, it was just like they basically were just trying to play up anything related to the freak angle, like in a bad way, right? They would just play that up, or they would play up, oh, the drugs. Oh, see, it's Silk Road and it's drugs and it's drug laundering, terrorism, whatever. You know what I mean? Like that's like the typical thing they portray it. So I wanted to change that, right? And there just weren't, at the time I started my show, there just weren't that many other people out there doing that. And I just thought, this is a joke, right? Because I'd been around like kind of following the space and writing a couple articles and things here and there from 2013. I'd spoken at a couple conferences, small ones in Sydney and Melbourne and things. And then I saw in 2017 just all this like just ridiculous shitcoin shilling, blockchain use cases and whatever freak coverage. And I just thought, nope, fine. I'm just going to put my foot down. I'm going to put that material out there, and I'm going to create a curated pathway for new people to come in and learn good, honest, in-depth information explained for the layman in layman's terms. Because it's just now there's just too many people, and they got confused, right? So new people coming in thought, like if you rewind back to 2017 and 18, the thing new, it was like, oh yeah, see, you got to come in and like look at the different projects, and you need to like read the white paper and like then think about what shitcoin you want to invest in, and and it's all about do your own research, and then the thing is they would be like, oh yeah, see, 99% of coins are shitcoins, but guess what, my shitcoin is not a shitcoin and you should buy my shitcoin. And it was just like no, just Bitcoin only, no shitcoins. And so that was a big driver for me in terms of making the show. And then over time, I sort of grew along with the show, and I guess the show started to become like, there would be times where I would interview people at a more intermediate or advanced level, and it would be kind of a show for that kind of person, where maybe if they wanted some more beginner material, okay, maybe there's somewhere else for that. So now where I see my show, it's kind of a mix, right? Like I have a mix of material, but I'm probably a little bit more in the intermediate or advanced level Bitcoin material nowadays. But I still do occasional kind of beginner things as well. But that's kind of how and why I started. Well, that was why I basically started the show.
Yeah, that's awesome. So let's get into some of this content. Austrian Economics. So, if someone were to say to you who doesn't really, know how to frame Bitcoin, they'd say, what do you say to people who say that Bitcoin doesn't have any intrinsic value, or that it doesn't have any returns or kickoff income?
Yeah, so this is a common one. So the short answer is there's no such thing as intrinsic value. It's all subjective value. It's subjective value all the way down. It's, it's turtles all the way down. It's subjective value all the way down. The only reason we even value it all comes back to subjective value. But the question, and this is kind of like a Peter Schiff thing where they sort of say, oh, see, I can't do things with Bitcoin, right? Because they think of it as like, it should be like gold, and that you should be able to make cufflinks or jewelry or whatever, or industrial use with it. And then therefore it's like, no, that's not understanding why we hold money. So there are different ways to characterize money, but Mises spoke about money as being a sui generis. It's a unique thing, right? So you have consumer goods, like things that you consume right away, or capital goods, things that you use to produce consumer goods. And those capital goods, there are levels to that, right? You might need to, you might need to cut down the wood before you can build this other table that you can then use to make some other thing. And there are levels and stages to that. So now, in fairness, there are some people who argue, some Austrians as well, who argue that money is actually a form of capital good in that sense as well. But nevertheless, the point being, why do we hold money? Well, we need something that's more marketable and more saleable. And that's also a big confusion for people. So I call this a big category error. A lot of people come into this with a category error of thinking, oh, see, my stocks or my bonds, they pay a return. So stocks, they might pay a dividend. Bonds, they might pay a coupon. So they're looking for a traditional investor mindset, but they're not understanding that that's not why you hold money. Money is not meant to throw off a like a return in the sense of an interest rate or interest payments or dividend payments. That's just not what it is. It's there to reduce your future uncertainty. So a good way to think about this is if you already knew what you were going to be paying in the next 6 months or whatever, you might then go and buy financial instruments that come due at that time. So if I knew I got a $3,000 payment coming up in 6 months time, theoretically I could go put that money in the term deposit and have it, ready and in 6 months. But the point is, I don't know what could happen in that time. And so I need to keep some buffer. I could, break my arm and need to go to hospital and pay the expense for that. So that's why I keep a cash buffer. That is why we hold money. And so then it's understanding how to explain to that person why that's a category error to think in terms of stocks and bonds or property with rental income, whatever, that Bitcoin is a different thing. And over time, it's become easier and easier now with all these billionaires and big companies who are coming in. But that's the important point that we have to try to teach people. And the other important point is that there is no intrinsic value. It's all subjective value all the way. And the other point as well is that arguably we could say that Bitcoin is more like a pure monetary commodity. It does, like, the fact that it doesn't have other uses makes it a better money. It's actually more suitable as a money because it's not used for other things. It's the reason is we're looking at what has the best monetary qualities or characteristics or however you want to call it, and that includes a range of things. Obviously, scarcity, stock to flow, like Safety would say. Divisibility, durability is an important one. So, and durability is not just like how you hold it or how easy it is to hold it, but it's also about durability of the institution. So, for example, if you have to trust a central bank, and this is again kind of getting into the Nick Szabo trusted third parties are security holes point, but it's about who do you have to trust not to debase the money. And in that sense, Bitcoin is also more durable because as an institution, it's more reliable and predictable than, say, trusting the central bank not to debase your money or the government not to create this environment in which your money gets debased. That's the important point to understand. So that's why durability is not just kind of the physical durability, but it's actually about its durability as an institution. And so, yeah, then a whole bunch of other things, established history and fungibility and so on. So those are, I think it just comes down to understanding which is the most marketable, what is the most saleable commodity, and why should we anticipate that people would want to hold the less marketable one when they can hold the more marketable one?
Right. Yeah, I agree with everything you said. I think also money's a language. And I think, built into the common vernacular these days is that any money you don't put into stocks, bonds, real estate, gold is disposable income. And it's just hilarious when I dwell on that term because it's like they encourage you not to save because that would be in real economic parlance savings for future optionality. And they're saying, no, just it's disposable. So a couple, I got several more questions. I'm going to skip, is Bitcoin a scam? Is Bitcoin gambling? Is it a tulip bubbles? If tulips could tell time, we would have that discussion. Can the government shut it down? Can it get hacked? Is there going to be a better Bitcoin? I'm just going to skip all those. And the next question is, what does it mean to have a fixed supply and why is that important?
So I think that's important because it arguably means Bitcoin is more predictable. So in a world of uncertainty, we have 21 million. Now, okay, if we're going to get technical, it's a bit less than 21 million, but let's call it 21 million. That gives people their ability to plan for the future. And in that way, and so this is kind of the point where we look back to, say, the Julian Simon point, which is in The Ultimate Resource. And so in that book, Julian Simon explains how over time, humans have just become better and better and better at producing and getting more for less. And so, for example, he spells out, if I recall correctly, he spells out the amount of human labor hours it took to get electricity and enough to have light that dramatically fell over time because we became more productive. We had growth deflation. And so he points out that basically for any resource or thing that humans need, we can either make more of it, we can find a substitute good, or we can economize and use and get more for less, basically. Now, with everything, pretty much on a long enough time horizon, that's what happens. We either find a substitute, we blah, all those things. But understand, in the case of money, you need it to be the most saleable thing. So you don't really want to substitute for something else because you want the most saleable thing. And then in terms of, producing more of it, we know you can't because there's only 21 million. It's programmatically limited. It's actually more scarce than even gold in that sense because gold can be mined, right? It's just a question of how profitable is it, right? So if the price of gold were to go high enough, now more mines and things would come online because they're now profitable at that price point. Whereas at the current price point, they're not profitable, etc. So the point being, assuming the price were to go hard enough and high enough on other things, people could go produce more of it. And this is where the whole Bitcoin 21 million limit and the difficulty adjustment come in, because that is where it really is so important that it has that limit, because now you just can't, no matter how much mining hash power, how many ASICs you throw at it, you will not make more than 21 million coins. That's the simple fact. And so because of that, that provides more predictability for people. And that is also the underlying basis for number go up technology. And that's why we're seeing the number continue to go up over time. I think that's the simple, that's kind of the broken down answer for the concept of number go up technology.
How is money an emergent good?
So think of it like this. You might have different towns and people need an intermediate good. They need a medium of exchange because let's say you want eggs and I want fish or whatever, and we don't necessarily want the same thing. Well, we need a common, easy way, a medium of exchange. And that's the whole point, to solve the double coincidence of wants problem. And then imagine that, let's say you're in some town where you can't get, let's say silver is the next most marketable good and there's no gold in that town. It would still make sense for you to trade whatever you make for silver, and then go, like later when you're in some other town, you would trade your silver for gold. And you can sort of see how this, over time, it just kind of drives that kind of bottom-up conception or bottom-up emergent idea that where even without us explicitly saying, hey guys, gold is the money of our realm, it just naturally converged that way because that was just kind of the incentive because of the differences in saleability. So in some way, it's subjective perception, but there are certain objective characteristics that we can point to and say, yeah, look, see, this is actually more marketable. This is more saleable. And therefore, we think that would make it better money given enough time. And so I think that's one way to think of it. And even another point to think about here is consider, now I can't remember the exact examples, but I've read where there were times where independently different areas came to use gold, right? So it's not that like these people were all talking, but they sort of still each of them had converged to using gold. Why do you think that is? Well, it could be, it could be that maybe it had certain qualities and characteristics that made it emerge in that way. So that is a really important point to understand. And that's why I often point people back to Carl Menger on the origins of money. Now, he wrote that in, 1890 or something like that. We're talking, 130 years or something like that, roughly 130, 150 years ago, something like that. So, this stuff has been around for a while. It's just that people don't know the right focus. So then they get taught some normie economics BS and they get taught some kind of, the fiat money system needs to operate this way because whatever, the government helps us and we would all be screwed if it weren't for the government setting down a standard of money. No, standards will evolve on their own. And we don't need like a government to come out and say, this is the money of the land.
Right. I often use the gold analogy of, imagine we were all using rocks or minerals, whatever, to trade. And like someone in the village finds gold and that's me. And I found the gold up in the hills and it was just lying around. and you bring it down to townspeople, and you're selling it at some premium over whatever they're using currently. But it's really inexpensive because no one believes you yet. And you got to kind of prove it in the marketplace. And then, the next time you come back to the marketplace, it costs you more to get this gold. You had to go a little further into the hills, or maybe you had to hire some people to dig a little bit for you, and you took some risk to find it. But over time, now you're offering it at a higher price, and maybe they don't want to pay. And you say, well, then I don't have to sell it to you. I think this is worth this price or more. And that's just kind of how it emerges in kind of one way I've looked at it. How would you kind of, how would you describe collectibles as a way of delaying reciprocation, like described by Nick Szabo in his essay?
Yeah, so the whole collectibles thing is really interesting, and I think he spells it out really well in Shelling Out. So I think it just comes down to how people would use it for big life events, right? Like a wedding and like a dowry payment, or a death in the family and they're passing wealth down, like that was the, I guess. And so I've seen Nick Szabo comment on this as well, and I think he called it something like medium of wealth transfer. So he was saying, and this was especially coming up during some of the Bcasher debates, because they were saying, oh, look, see, if I can't spend it cheaply, then it's not a medium of exchange. And then I think Nick Szabo's kind of counter argument there was something more like, no, think of it more like medium of wealth transfer. You're not necessarily going to be doing every little small transaction on chain. And this came into the whole scaling debate. But the point is, even if you don't pay exactly using the Bitcoin network, you can still pay using the Bitcoin unit of account. And that's an important point, right? Like if I pay you US dollars, I can wire that to you, or I can pay you with PayPal. It's still US dollar. It's just a different payment rail. So that's kind of the important point to think about there. So then, when it comes back to collectibles, it's just, at what point in human history did people do those large transfers? And it was typically like big life events or big events. And then later it made more sense for people to do actual interpersonal commerce. And that's where gold coins and silver coins and things, necklaces, were the practice.
Right. How do how do you describe like holding multiple currencies as different than having, say, more than one social media account?
Yeah, so this is an interesting one. So it's like we have to think through the opportunity cost, right? So the opportunity cost for us to set up a Facebook account and a MeWe account and a Twitter and a Instagram and all these different social media accounts, you can freely set them all up. It doesn't cost you more to have them. But in terms of your personal balance sheet, what you hold in your asset side of your balance sheet, there's an opportunity cost there. Because if you hold, USD or maybe some other fiat, shitcoin, there is a real opportunity cost for, not holding Bitcoin. And this is becoming more and more apparent. More people are starting to learn this. People like Michael Saylor have explained it very well as a melting ice cube. We all feel this opportunity cost very real. Like at least people like you and me feel that. The typical fiat normie has not understood this point yet, but they will. They'll be forced to. And when they do, they'll be running to Bitcoin. And so they need ways to, kind of understand this point and understand the point about inflation. A lot of people have not been financially like you and I have. And so they don't think about these concepts of inflation and, hey, if I leave my money in the bank, I'm actually losing money over time. They're just not thinking about these things at all. It's like, to use the saying, I think Daniel Sanchez wrote an article about this. It's like inflation is sipping your milkshake, right? You got your milkshake there, but basically the government and the central bank and other banks that are part of the system are there basically sipping your milkshake, sucking the value out without you knowing. And so that is an important point for us to convey to people.
What does it mean to have an immutable ledger?
Yeah, so this comes back to people being able to have confidence in the overall Bitcoin system. You know that once you've sent it and you've got sufficient confirmations on that Bitcoin transaction. So if I send you whatever, $1,000 worth of Bitcoin or whatever, and you wait for a few confirmations, you now have a very strong assurance. And in some ways, that is an assurance that the fiat banking system cannot provide you, because the fiat banking system, it's centralized. They can just claw it back. But in Bitcoin, obviously, we have this whole saying, not your keys, not your coins. So if I send you that $1,000 worth of Bitcoins, then, and you've waited and you've received it in confirmations, 2 or 3 confirmations, now you're very certain, you have a very good level of confidence that that money is yours and nobody can centrally take it from you. And that is just unheard of in today's world. Now, the difference, and I could give you gold, but we're in different countries right now, so we don't have an easy way to do that, right? And then what does that do? If I were to try and send you gold, now we're reintroducing a custodian. Now we're reintroducing a person who could steal or centrally screw with that transaction, or etc. So I think it just it all works cohesively together to make, this product, if you will, this monetary product of Bitcoin.
Is it? Yeah, I agree with everything you said there. Is there anything else in the world that is immutable?
I don't know, man. That's a hard question. Because like a lot of, well, I don't know. There's probably things out there, but I just can't think of them off the top of my head. But a lot of things can be rewritten. A lot of things can be changed. But I think it would be extremely difficult, like almost impossible, well, basically impossible to go back and rewrite the Bitcoin ledger, right? It would just be, yeah, you would need some kind of crazy tech that no human has access to.
But any other chains or time chains or blockchains that are immutable?
Oh, I see. Yeah, I guess I don't really think of the altcoins as having immutability, but
I don't either.
I don't know. Yeah, it's because it comes down to how are they secured? What is the security technology on them? How many people are even doing that? What's the hash rate on that? How many people even care? How many people are reviewing the code of those things? Or how many people are even interested? Like, is there any, because if there's less monetary value in them, there's just less incentive for people to care about it.
Right. Yeah, I think the only other thing that's immutable is reality. What do you think? How would you describe that liquidity begets liquidity, as Pierre Rochard described in his essay?
Yeah, that's a very Pierre thing. So I think that's just a modern frame and understanding of the concept of salableness. I think that's one way to put it. And so it's just a modern framing of that. And so I think of the liquidity begets liquidity argument is like in within the kind of crypto world, obviously it's Bitcoin. Like there's just no other thing that's like that easily marketable, if you will. Now, maybe you could say, okay, fine, the USD stablecoin stuff like Liquid Tether or whatever, USDT or whatever, but that's a different thing, right? That's a different kettle of fish here, because that is not its own unit of account. That's just tracking the US dollar, right? That's like crypto fiat. That's just like, basically, it's an easy way to represent fiat money. Whereas obviously with Bitcoin, it's another whole thing. It's its own unit of account. It's its own token. It's its own monetary network. So that's how I would distinguish there.
Do you think maximalism is built into money itself, like kind of like the Pareto effect, or like winner take all?
So there's an interesting quote by Mises. I often point this one out. It's from Theory of Money and Credit, and so he's saying basically there would be a tendency towards the most saleable, and thus one by one the less marketable commodities would be rejected as monies. Now, in fairness, though, I should say there are differing views or explanations amongst Austrians on this point. There are others, and I think, like, if we're going to be trollish about it, maybe Mises was more of a maximalist, and Rothbard might have been a little bit more like, oh, you might have gold and silver, right? And now maybe I guess the safety answer on this would be, hey, divisibility was why we couldn't do it then, and that could be why. But say if you read Guido Hülsmann, The Ethics of Money Production, he talks about not natural money, he talks about natural monies. And so it could be, again, a similar kind of gold and silver sort of story. But I think fundamentally, there is just going to always be that tendency towards the best, most saleable. And so long as you have access to that, well, then why wouldn't you use that? So The only reason then is more like if you are forced not to, and that's a fiat thing, that's a government rules thing, that's a legal tender laws thing. So so this is, I guess, in years gone by, I've kind of gone back and forth with people like Andreas and others who were talking about like multi-coinery and like a multi-coin world. And I've been much more like, no, single coin, like Bitcoin is it. But the thing is, people who come from like more of a multi-coin perspective might think of it like, oh, see, look at all these tokens that have been created over the years. How can you say Bitcoin is the only one when there's all these other tokens out there and they have value? And I guess the point from my perspective is more like, but they're trending down in Bitcoin terms, right? Long term, they all are. Like if you look at basically any shitcoin, you pull it up and you price it in Bitcoin and you go long term, it pretty much always is going down, unless it's kind of on its, like some of them kind of have their day in the sun. They might have their time in the sun where they pump for a little bit, but then long term they're going down in Bitcoin terms. And that should tell you something, right? That should, or if you go on Michael Saylor's website, strategy.com, and you can see that he literally has set up the site where they've got all these different assets, whether it's S&P, whether it's 500, S&P 500, or gold, or other, other indexes, other currencies, and all of them, or stocks, they're all just going down in Bitcoin terms. And that should tell all of us something.
Yeah, I agree. Everything you said there. Bitcoin, not shitcoin. In terms of, you said something earlier in the show about 6-month term deposits, and DeSoto makes the case for full reserve banking. And if you could kind of get a little bit about what he means there, and I'm framing that up with like, how should banks really matching different kinds of deposits with different kinds of credit issued, and how the FDIC, and the guarantee there kind of interplays with the risks banks take on.
Of course, yeah. So DeSoto's book, Money, Bank Credit, and Economic Cycles, goes into this in a very, big, like very minute, very strong detail about the issues of fractional reserve banking. And so essentially the point is that by permitting banks to legally fractionalize their reserves, it's basically forcing everyone into this position where we have to accept the US dollar or the Australian dollar as legal tender. So it's legal tender laws, and these explicit and implicit bailout guarantees, and this functioning of the lender of last resort, and plus a few other things that force people into this situation where money is now, it's like a race to the bottom, because now if they can create new money by loaning it into existence, then they can get a huge benefit out of that. And so we are basically, we're like slaves on the plantation, and we're all forced to use this shitty money because it's like, that's like the slave money, right? We're all forced to use it. Or we're forced to accept it, and so that's essentially how I would characterize that. Now, to your question about how should it be working, well, so people get confused, right? So in a full reserve system versus a fractional system. So in a full reserve system, just think of it like you would have demand deposit accounts, which are callable. You can use them you can get them at any time, where that is distinct from, say, the term deposit or the time deposit that you might put in, where the point is you are relinquishing control. You are not able to access that money, or you pay a penalty for it, that kind of thing. So banks in a full reserve world would segregate those roles. And so the point being that in the demand deposit, they would keep it on deposit for you, and it is your money. You should be able to access it at any time. But what banks are doing nowadays is, this kind of fractional reserve maturity matching, where they have what's called an interest account, and you can just immediately transfer it out and spend that without like relinquishing control of that money in that time. And so from the Austrian perspective, this is what causes the boom bust cycle, when banks issue credit over and above what was voluntarily relinquished, if you will, or put away, to say, no, I want a return on this. Therefore, I do not have access to it for 6 months in this 6-month term deposit or time deposit example. So in a full reserve system, I think the credit would be a lot harder to come by. It would not be so easy. And so that is also a big driver in terms of how government is so large, because they can get cheap credit. They can push the cost onto us, the population, and push it onto our children and the future generations without feeling it right now.
Yeah, I think it also leads to a lot of malinvestment, particularly by the banks, because they get, a free punt. The money they put up is going to be guaranteed up to a certain, 250K per depositor. And so it allows them to go out there and gamble with your money when they should be, measured by the risk they're taking and the success they have. I would park my money at the most conservative bank, but because we're all sanctified not even to care about what the bank does with our money, the FDIC will come and bail us out. And then that leads to all sorts of malinvestment in the community, because now people are kind of incentivized to go chase cheap money, and they think they're getting a better return than they really are. And we could talk about the bubbles in a minute. So that just kind of being on that, I know we both read the book, Thank God for Bitcoin. It's got 7 or 8 authors, so I'm not going to mention them all in case I leave one out. But great book. But do you think that fractional reserve banking is fraud, or that each loan or mortgage is sort of like theft from the community, both by the bank and the person taking out the loan?
So at this point, I'm not as, I don't know, you could argue that everyone opted into this. I don't know. It's kind of a harder point. I'm not as I know there are different views even in the Austrian community on whether it is fraud, or whether it's actually just even setting aside that question, whether it is economically bad and causes boom bust cycle and financial, these crises and things. So I think I'm not as kind of personally, I'm not as kind of set either way on whether it's fraud or not. I think it's just kind of a problem of the overall system that we live under.
Right.
And I think that in a Bitcoin world, those kinds of practices will get rooted out very quickly, because people will do proof of keys. They'll do the bank run. They'll pull their keys. They'll withdraw. So I see it like we're moving into a full reserve world, but there will be people who try it, right? There'll be Bitcoin banks, or nowadays maybe Bitcoin exchanges are playing that role. They are kind of like the Bitcoin bank. So there might be some that try it, and there have been some that have. But that's where the whole proof of reserves conversation comes in. That's where I think over time, because more and more people are learning how to self-custody, then it just becomes harder and harder and harder to actually do that with any meaningful amount, because eventually someone will get caught out by not being able to make a payout to honor a withdrawal for a customer. So I see that as the way that plays out. But remember as well, the important way to think about it is government legal tender laws force us to treat the IOUs the same. It forces us to treat, Bank of America IOU the same as some other bank IOU, where theoretically people might, transposing that into the Bitcoin world, it would be like saying, Kraken BTC is the same as, Coinbase BTC is the same as Zapper BTC, but they might not trade the same, because we actually have different perceptions of the risk of those companies. And maybe we would say, oh, look, I think Coinbase are dodgy, or I think whatever other company are dodgy. That would change your own perception of that IOU and whether it's a trustworthy IOU or not. And obviously in Bitcoin, we say don't trust verify. So the best is to self-custody. But, for, the people who aren't doing that, then at least it starts them thinking down that pathway. And I'm also, I guess, motivated. And I think it's cool to see some of the statistics in terms of the number of coins on exchanges is dropping. I think it's gone from something like 3 million coins on exchanges down to roughly in the 2 million coins range. Now, I guess there's a few factors here. Some of that is, people are learning to self-custody, but some of that could also just be the exchanges are no longer being used as custodians. It could be that people are going to, Fidelity custody, or, BitGo, and, Knox custody, and all these other, or Anchorage and all these other guys.
Yeah,
So,
or they could be naked. I think Coinbase having 130 million in Bitcoin is astonishingly, frighteningly low for where they are in the ecosphere. And I don't trust any exchange, even for purchasing, that lists more than one coin. I think they're messing with unit of count, unit price bias there, and I don't appreciate it. But you also said something, I agree with what you're saying about, whether fractional reserve banking is fraudulent or theft. I get what you're saying, where, everyone in the system is operating on rationally, going on the incentives in the system, and not being necessarily malicious. They're just trying to optimize the situation at hand for themselves.
Yeah. And actually, one point I would just add there is it's hard to say, because here's the thing. Like, theoretically, when you sign up with that bank, you signed on the dotted line to say, yeah, I agree with these terms and conditions. And surely it's like they like, this is the system you opted into. Like, this is, whether we like it or not, and obviously I don't like it, but this is the system we live under. And the other point as well is, I think while the system is there, we should use it in our advantage, right? Otherwise, if you try to not use the system, and for example, you don't use any fiat credit, any cheap fiat credit, you're now competing with somebody else who is for a house, right? When you want to buy your house to raise your family and whatever, like, you're competing against someone who is using that credit. Or if you're a business owner,
you're competing with Michael Saylor,
who's using that credit.
Right.
So,
you're competing with MicroStrategy, borrowing billions of dollars to buy Bitcoin, and you're competing with that, and you're
exactly.
Yeah.
So in that sense, it's kind of like we're in this situation, and maybe it's like a don't hate the player, hate the game sort of thing, right? Like, the system is what's wrong.
Yep.
I think, people using the system to their advantage. Well, I guess now that we've colloquially, even though you and I didn't agree to it, but the world has set it up this way. Well, now you just got to deal with it.
Right. I agree. How would you describe the Austrian theory of the business cycle, and how does the expansion of credit beyond the amount voluntarily saved cause a distortion in the capital structure? The economic booms and busts.
Yeah, that's a really great. You put it quite well, even in your question, to be honest. So the way to think about it is, okay, so there's a whole bunch of pieces that all go into it. So maybe we'll just start with kind of the high level understanding of what is this. So think of it in simple terms. It's that governments and central banks manipulate interest rates. That interest rate sends the wrong signal to some entrepreneurs, and it makes some of them go into and make businesses that are actually that were never possible in the long term sustainable, because the actual number of resources available to society was not the level that the entrepreneurs thought. It's like they got sent the wrong signal. And so why is that? Well, it's because, there are different pieces of capital out there in the economy. Some of them might be like, tractors. Some of them might be computers and other equipment to build things and make things with. And that capital has to be set into the right order. It has to be coordinated, and the interest rate serves as part of the coordinating function there. And so without that, we don't have a way to try to sort of put things in the right time and place. And so it matters the time and place, right? So I've heard Bob Murphy use this example as well. It's a really clever one. It's, imagine if, we went to sleep one night and, the mechanic's tools got swapped with, say, the farmer's tools, right? And so the economy would still have the same amount of capital, but no, hold on, it matters where. It matters where those pieces of capital are and how, like, the stages of production. And so essentially what it does is it sends the wrong signal, and then entrepreneurs think there's more things or resources available when really there's not. So it would be like, and I think Mises uses this example. He says something like a master builder who maybe he planned the house with 10,000 bricks, but then later he finds out, oh no, actually there's only 7,000 bricks available. Well, now I need to redo the house, or otherwise it's literally not going to be possible. Like, not all of these projects that have been entered into can sustainably be completed because we don't have the resources. We got sent the wrong signal. And another kind of more colloquial or funny way I've heard people say this, some Austrians say, it's not that entrepreneurs become idiots, it's that idiots become entrepreneurs, right? So it's kind of like, it's sort of saying that people got sent the wrong signal. So they all ran to this market thinking there'd be so much money to be made there. Right now, a colloquial example might be house flipping, right? Every man and his dog thinks he's a property expert. They all want to be a property mogul because they're all sort of playing this arbitrage. They're all playing this game of house flipping, because again, what's that all driven by? The cheap credit, the easy credit that kind of sends the wrong signal that, hey, this is a productive thing to do, when really it's just people just kind of building and flipping houses to each other, flipping it on to the next greater fool. Now, it's okay, in fairness, there's some level of like, yeah, genuinely the population is growing, we need more housing, and that demand for housing, blah, blah, blah. But the reality is, because of a lot of the regulations and NIMBYism, not in my backyard, people stop sort of developments in certain areas because they want their property value to go up. They want the property number to go up. They don't want it to go down. And so we've politically, around the world, I know this is the thing in Australia, and it's probably a thing in America, and it's probably a thing in other countries too, is that the governments have created this environment and led everyone to their own slaughter sort of thing, because all these people are now living in high debt in this structure, and they can't let the rates go too high because a lot of people will go get wrecked, and they can't let the rates go too high because the governments will get wrecked, because governments won't even be able to meet their debt servicing obligations. So it's a real problem that we're in, and obviously Bitcoin fixes this, but the earlier you're into Bitcoin, then the better you'll be when the chips fall down on the other side, or where the chips fall.
Yeah, I agree again. I know Ethics of Money Production by Holzman, I believe, is one of your favorite books.
Oh yeah.
And so what is he getting at with like how government intervention made money what it is today, and what are the cultural consequences of fiat money?
Yeah, so love the book. My interview with him was one of my favorites. And so essentially it's that process we've been speaking about. It's that the government co-ops the process of money because they have an incentive to do it, right? If you're a politician and or if you're a big business, or if you're a banker, you have this incentive to try to create this system that you can benefit from. You can extract more wealth out of the rest of the population. You can take other people's property for pennies on the dollar or far cheaper, because when all these liquidations happen, then maybe you can be the one buying up that property, or because you've got the collateral. So I mean, obviously there's risks too, right? Banks go under too, right? So it's not like zero risk for them, but fundamentally government has this incentive to go and take more control of the monetary system. And so that drives a lot of this fiat credit world. And Guido Hulsmann is one of the guys who's most well known in terms of this cultural consequences of fiat point, right? So Guido Hulsmann makes this point, Joseph Salerno makes this point, Rahim Tagiza-Degen makes this point, and obviously in our Bitcoin world, Safedine makes this point, and I'm also kind of a proponent of this point as well, which is that fiat money has cultural consequences. It drives larger centralization into the government. It means the government can run a welfare state more easily. It removes the future consequences of our bad decisions, and it forces, in some ways, in the past when there was less of a government safety net, and yes, there were private safety nets, there were private welfare states, if you will, or private, beneficial societies and mutual aid societies, but it removes the consequences of our bad decisions. And so then we start to act in a more short-term way. We start to not think about our future, think about our children, or think about our parents and our grandparents. We start to think more about me, and it becomes a bit more of a short-term consumer society. Now, and we all face this, right? Like, I think we all kind of have this incentive to go and do these things because you can just get cheap credit and use it today instead of actually saving and kind of doing it the more prudent way. But again, it comes back to don't hate the player, hate the game, right? We're in this system, and that's the problem. So that is a thing that really changes the way we are and the way we act and the way products are built and services are built, because it's all about servicing that need. So yeah, it creates a lot of problems, and I think in some ways it also cuts against the role of the family and the community and things like that, where we're now sort of put into an individualist way, in a way that's not necessarily a free market libertarian way, but more in like a fiat money caused way.
Yeah, I agree. It's interesting. I think a lot about what you said about, it changes the way we think about our future and family and things like that. And I think that's because, a lot of people don't have this collectible where they can delay gratification, and they have a very hard time thinking about how they're going to get started in their lives because, asset prices.
Another good example I can give you here as well is when you go out to safari or you see all these animals and, the tour guide is saying, hey, for these animals, it's all about survival, right? They are literally, they don't necessarily know where their next meal is coming from. They're just trying to avoid being eaten by the lion or whatever. They are just thinking in a very short-term thinking. And so in another way of putting it, it's that we are being forced into thinking more like animals, right? The thing that we became so strong and powerful was our ability to plan and use technology and build things into the future. Where government has pushed us is in some ways it's making us more like animals. We have to we don't think for the long term and plan for the long term as much as we would have. So, I mean, we still do, but just not as much. So that's probably another way to try and come at that problem and explain it and think of it.
Yeah, and I think on that note, we should turn more to Bitcoin. So take even the fun stuff a little higher. And, one of the things you said on Toxic Happy Hour is you kind of framed it up like there's social justice warriors. And I'm not getting into that debate or anything but like that. But you were like, I'm a monetary justice warrior. And, I thought about that a lot. And, one thing I think about is whether were you looking for Bitcoin or did Bitcoin find you? In that regard, were you someone who was in the village and everyone was trading shitty rocks and you were like, hey guys, I don't think it's out there yet, but like, I'm keeping my eyes open. Because I think if you're, an Austrian economist, like, something's wrong. You're looking for, I think the realization for me is not that you're looking for more money, but you're looking for a better tool. You're looking for a tool that tells you the truth. And then when you find that tool, it's kind of like it's non-debatable. And it's one of the reasons.
So for me, I guess, the way I would put it is I saw it like there just wasn't much hope for libertarianism, right? So for me, I see it like government is too big. It needs to be smaller. I would like to see, zero government and fully privatized everything, but fine, I'll accept even if we can make the government smaller. That's at least better than what we have now. And I saw it, in those earlier days, at least in terms of me learning about Bitcoin, I saw this as like, this is actually a real possibility to actually make the government smaller. Whereas historically, there had been very little success at that. So up until then, I was just kind of hopeless. It was just more like, well, I mean, like I saw it like, hey, it's just an intellectual pursuit. Like I just think Austrian economics is right. It's the way things should be. And I just don't think I have much power to actually make that happen. But then coming across Bitcoin, it made me think, well, hold on. This could really change the game. This could be a technology that really restricts the size and the power of the state. So from my point of view, it just became like, wow, there's actually really hope now. Because up until then, I mean, I'd been reading a lot of this stuff, but I'd treated it like, hey, it's just an intellectual interest of mine. I have my career and I have my stuff, like my normie job and whatever. And this is just an intellectual interest on the side. That's basically what it was for a long time, because I didn't see a way that I could feasibly make it happen. But then with Bitcoin, it did become more like that and I think now it is, it's on that pathway of making that happen. Now, other people might say, well, that's really crazy. How can you say that, Bitcoin is going to take away fiat money or destroy their ability to inflate all our money away? But, for the last, 12 years or so that Bitcoin's been around, on every conceivable metric, it has been growing, right? More users, more adoption, more everything. I just don't see how this trend stops. I just think, there might be there'll be road bumps and speed bumps along the way. There'll be governments who try to ban it and stop it and slow it down. But fundamentally, I don't see them stopping this. You just can't stop this thing. Like the train has been set in motion now. And it doesn't even matter what you or I do, right? Like I think in some ways this is happening with or without any of us. None of us are that important to this game. It's carrying on its own steam. I'm just trying to help people get to that earlier, because I think the more that I can educate people, the better like the whole world will be. Because as you were mentioning, I see this as a question of justice. There is a grave injustice being done by fiat money and central banking, and so anything that we can do to help advance that and bring that about a little bit sooner is a huge win, because there are people in countries around the world who don't have this luxury. They don't have anywhere near this kind of luxury that you and I enjoy. And if we can advance the hyper Bitcoinized future, even just a little bit, and you save, a few countries or a few people from having to have their wealth totally destroyed and wrecked, then it'll all be worth it.
Yeah, I agree with everything you said there. So I'm going to ask you, like, how long, I agree with everything about, Bitcoin is unstoppable. You and I don't matter. I don't think the individual matters in this, in the people's money. But how long can they keep inflating the fiat money? And I frame that up in, Japanification of Japan's economy, and whether the dollar lasts or not or hyperinflates. You could still monetize the economy from a national perspective. And also I buttress that up against like central bank digital currencies. And, so how long can they keep just inflating the money supply?
They'll do what they can. So they will try to eke it out. They'll try to kick the can, because none of them wants it to go down on their watch, right? So if you are a central banker, or if you are the president, or you are whatever, you don't want it to go down on your watch, because it looks bad on you. Your legacy is now tarnished. You are tarred and feathered, like from their perspective. They're worried about that. So they will do everything they can to keep the party going. Now, that will mean kicking the can. That will mean going into more debt. Eventually they'll try to put it into hidden ways. They'll try to force people to wear the cost for their irresponsible policies. Of course, these are the things they will try. Do they have maybe another 5 to 10 years in that? Yeah, probably. They can keep kicking the can for another 5 to 10 years, I would say. But I mean, that said, we are seeing inflation really come up a lot now. So, people are saying, it might not be CPI inflation. No, it might be more like an asset inflation thing. But eventually, it'll trickle through. Like the cost of living for people is rising, and so obviously, if you're a high income earner, you're probably okay, right? But for kind of middle and lower income earners, it is starting to become really more of an issue, especially things around housing affordability. That's becoming an issue for people. Well, the issue there is really becoming worse. So I don't know in terms of where the world goes as far as currencies. It may be more like a multi-currency. We're going to live in a multi-coin world for a little while until Bitcoin kills them all. It'll be a little while. So my kind of baseline is mid to late 2020s is when like we see the real kind of Bitcoin go crazy stuff. I don't believe this is the final cycle, as I've spoken with Preston, and I think we will probably hit a point where there's just so much kind of euphoria, and so many people just buying, and there'll be weak hands, so then it'll dip a bit and then it'll kind of crash back again. So I don't know. I mean, who knows? But at least for me, I'm thinking about it like, yeah, we'll probably go really high, and then we'll probably see a big drawdown like we've seen in 2014, like we saw in 2018. We'll see that big drawdown, and then maybe in future it'll come back again, and it'll be even higher. So but I don't want to be too firm about that, because we could be totally wrong, and maybe it really is just kind of we're already in that final cycle, if you will. There's a small chance. I just think it's unlikely. Yeah. That's my current view on that. As for central bank digital currencies, because you asked about that too, that is just a question of ease of use. There'll be all the normies who go and use that because that's what they're promoted to in their Facebook Messenger app or whatever app, or their banking app that they already use. They'll just use that. But then anyone who looks at the price chart, they'll see orange coin number go up, and then they will want to get some. Right. And so they will be onboarded in some ways because that will help them understand that money was digital anyway.
Yep. Yeah, I see.
Australia is actually going quite cashless as well. So that's another example where there are articles now saying, yeah, Australia might be mostly cashless in 3 years. Like that, all the Hysteria 19 stuff advanced the war on cash to this point. Who knows?
Yes, I'm not crazy about the war on cash. I also I lost my train of thought there in terms of we were talking about central bank digital currencies, and I see that. I think I agree with Jeff Booth where I think that's more of a war between central banks and commercial banks and eliminating them as the middleman between the people and the central banks. So I think that I think this is a way for them to surveil and also just distribute directly with the people they want to distribute the money to, and not so much an attack on Bitcoin. But they'll use the affinity scam of it's like Bitcoin to sell it on Facebook and move it through the people, and that would be the messaging. But I think it's really taking out the commercial banks and making them kind of useless.
So yeah, that part we're not so clear yet because it could be that central banks don't have the capability to go and do all the distribution that commercial and retail banks do now. Like, for example, those commercial and retail banks, they run the call centers and the branches for the normies to go in and get their stuff sorted, right? Because
right.
If you think of the typical like fiat normie, they're not like, they're not necessarily like, a lot of them struggle even to set up the banking app on their phone and things like that. Like, there are people like that. And so you need, like, if they wanted to do that, they would need some kind of network for that. And so that's the interesting question of whether central banks go for this kind of, they still use commercial and retail banks in their model to kind of be their distribution vector, or they do it all themselves. They centralize it. It kind of goes more of a nationalized route. Like, they set up their own call centers, their own branches. Because like, what happens when you forget your password and you need to go and recover all these kind of things? Like, there's a lot there for them to deal with. So we don't know which pathway they go, but if they do try to cut out the retail and the commercial banks, well, then the retail and commercial banks might be effectively on our side as Bitcoiners. Like, they might effectively then be like, hey, you're cutting us out. Fine, we'll do all this Bitcoin thing instead. So we don't know exactly where that goes. Also, governments are very slow. So they might be, I think the ECB people were saying it might be another 3 or 4 years until their stable coin is out. So, like that might be next cycle that we even have to think about it.
Yeah, these are really good points. So I'm going to ask you this next question again. I'm not really interested in trading or speculation or price prognostication. I'm not a prognosticator, and I don't think you are either. And I've heard you speak on that. I'm not sure if a word's in your mouth. But what do you think of, Plan B's stock to flow model from, economic theory and sort of the use of prior historical data and sort of pointing to where the future can go?
Right. So yeah, certainly the Austrians, like, the joke is that, Austrians don't use data and stuff. But I think it's really more about not using data to divine an economic law, right? So you use deductive, you start from a certain like known truth, and then you kind of reason from there in a deductive way to come to certain conclusions about the world and about economics. And, man acts purposefully, and then blah, 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 certain assumptions. So that's the part where it's hard with stock to flow, because it is using that data. But at the same time, I don't know, is there something, this is the argument that, my friend Stephan would make, that, hey, maybe now economics has a constant, 21 million, right? Maybe that actually is a changing factor. Maybe that really does change things. I don't know. I just think it's interesting. I don't know. I know there are arguments pro and against, right? So, other people like my friend Corey at Swan Bitcoin is obviously very anti stock to flow, and he's more like, no, it's autocorrelated and therefore it's invalid, and so should not be used as a model. And he wants to sort of stay more like, no, we shouldn't be promoting that at all, and it should just be talking about, hey, Bitcoin is a better money, you just buy it, and your models will get destroyed anyway because some billionaire could come in and blah blah blah, right? But then the safety inside might be more like, well, look, it's stayed within a standard deviation. It stayed within that range. Like, if you look on those charts and and it performs in an out of sample way, right? Like, you could have predicted theoretically, not that I would trade on this, right? So for me, I'm not out here, like, I've interviewed Plan B on the show, obviously, but I'm not out here saying, yeah, guys, let's all trade based on it. No, I'm just saying, hey, I think it's interesting. I'm not saying, yeah, let's like, I'm putting my, staking my name and my reputation on this thing that I think it's going to hold up. I think, it's just an interesting thing, and it probably breaks to the upside when we hit the final cycle. So we're going to break it. It's going to go up and it'll break out of that range, and then that'll be it. It'll be done. But, for now, it's still within that range. I understand like the counter argument from some of the anti-stock to flow people, like maybe Eric Wall or Nick Carter, or people might be that look, see, the model was just not valid. Like that's just statistically an invalid way to argue about it. So therefore it's not even in that category of being like a not useful model. I don't know. Yeah.
That was really awesome take on both sides. I really appreciated that. So again, not really looking at prognostication, and you've touched on this a little bit before in our conversation, but like, what is your take on hyper Bitcoinization? When I say about, is this a super cycle or a final cycle? What I'm hoping you'll elaborate on is like the need for enough dollar cost averages, enough DCAers to keep up the price at some point.
Yeah, right. So I've mentioned this as well. So it's kind of like the way I'm viewing this is the market gets ahead of itself, as in people go crazy over this thing, right? And as in 2017 we saw it, in 2013 we saw it. So I think of it like the more dollar cost averages there are out there, whether they are individuals or whether they are private companies or family offices or micro strategies of the world, big public companies, the more dollar cost averages there are out there, the more likely we are to hit a final cycle. That's the way I'm thinking of it, because there's just permanent and constant sucking away of the supply, right? Because they're buying it, they're stacking it to their cold storage, and they're hodling it. And that's the game, basically. That is the game of this decade, is stack sats and hodl it in your cold storage, in your multi-sig, in your, whatever your cold storage is. That's the game everyone's going to be playing. So what I see happening is eventually there'll be these kind of people just FOMOing in at the top, or momentum traders, or people on leverage who get wrecked because, we're talking about big moves and big amounts of money coming in over the next few years. And then, I think eventually, like assuming it's not the final cycle, right? Like giving out that thesis, it's kind of like we're going to get to a point where there's just not enough dollar cost averages to keep it at that height. And so then it's going to fall to kind of the level that dollar cost averages are at, and then it'll just kind of repeat and we'll just keep going. But the way I see it is, if enough people, if the narrative shifts that hard, right, that bonds are trash, why are you holding property, why are you holding stocks, just buy Bitcoin, if the narrative really shifts that hard, then yeah, we may see that escape velocity scenario, and people just go hard, and really it is the final cycle, and there is no kind of big 80% drawdown like we saw historically. So at least in my mind, that's how I'm thinking about it. It's like, I think it's possible that we're entering the final cycle. I just don't know, and I think it's less likely. I just think we're just not there yet. Like, it's a subjective feeling. I don't know, maybe things change over the next few months and it really does start to look like, whoa, okay, you know what? The change in the narrative, the change in the thinking, people don't want to hold bonds anymore. People don't want to hold stocks anymore. People just, or people around the world in like some other country, like Nigeria, apparently already has 34% or something like that number of people who've already bought Bitcoin. Can you imagine that? Imagine if 1/3 of Americans held Bitcoin. Like, it's insane, right? When you think about it like that. And so all these people, how are you going to stop that thing? How do you stop them? You don't stop that. So it's possible that certain countries will just get there before other ones, and they will go Bitcoinized, and they will be doing Lightning and everything. And,
I agree. I went out on a limb on Twitter. I said, I don't think there'll ever be another 90% drawdown. I just don't think we'll see that kind of negative volatility. I'm not a prognosticator. Who knows? It's just a tweet. But it was interesting. The first tweet back was something like, yes, but we'll never see an 80% drawdown. And I was like, why is this guy going lower than me? And it just kind of, and then there was successive, we'll never see 70, 60, 50. And, I do think that if we do see another large drawdown, I think it would just be a gift for true DCAers and long-term hodlers. I don't think we'll ever get that gift again. But what do I know? I've never been right in the short term. So is it sats or bits?
Sats, easily.
Got it.
That's the standard. Yeah, I mean, Lightning, it just makes sense. You on your Lightning wallets, you can just do it in sats. You just, however much if you pay whatever 200,000 sats, it's easy. Sats is the way, basically. So if you're a baller, you're paying in bitcoins, like 2 bitcoins or whatever, and then for small things, it's 3 million sats for that thing, or 2 million, 2 point whatever, however many sats. That's the way.
Boom. I agree. I also don't care. Let the market decide. It's not an issue for me. It's just nomenclature. So with the Guido Holzman interview, all of your interviews, I'm sure they're like children and they're stellar in my opinion. For that one, I wonder, like, again, not what you thought of the interview and what the people thought, what you thought, but what do you think he thought? And did you think that it resonated with him? And where did that put you?
Yeah, so I think someone like Guido Holzman, he's probably open to the idea of Bitcoin. I don't know if he's like necessarily a big hodler, but there are other Austrian economists, who I talk to who do hold, right? And they've even admitted on my show they're hodling some Bitcoin. So I think I'm excited and hopeful that the Austrian economists come around. Like, obviously there's and I'm talking here more like not Safety and like, I'm talking like people from the Mises Institute, right? Like those kinds of guys. I'm hopeful that they get into Bitcoin. I know even Tom Woods, right? He's a fellow, I think he's a senior fellow at the Mises Institute. He's spoken about being a hodler. So, so I'm hopeful. I'm really hopeful that more of those guys hold some coin, because I want them to be rich. Like, I want them to, have some wealth as this thing grows. So I think most of them are coming around to it. That's my impression.
Yeah. And my final question is around, what does the future have in store for Stephan Livera? Where do you want to be in 20, 30, 40 years? What do you want to be doing? And, if you could kind of just touch a little bit on that with, citadels, whether they're real, physical, and or just inner, or both.
Yeah. Yeah, that's a good question. So for me, short to medium term, I'm hoping to be able to travel a bit more. Like, once, restrictions come down a bit and travel bans and whatever, I'm hoping to be able to travel more and kind of be able to travel around more to the Bitcoin conferences and just kind of go around to different Bitcoin meetups and, just do it a little bit more like a digital nomad in some ways. I'm hopeful of that. I don't know if I will be able to achieve that. And I guess longer term, maybe I'm going to set up my own Citadel someday. But so Citadel wise, I see it like they start more like a virtual thing, as like a personal thing, and then over time becomes more like a real thing. I expect mid or late this decade, we will see some real solid Bitcoin Citadel attempts set up, right? Because the wealth will be there, there'll be enough people, but it'll take time to get them set up. And how do you trust it, right? Like, you need some well-known Bitcoiners there to kind of start them. And there are risks to that too, right? That, it could be a honeypot, right? Or maybe it's like an easy way for someone to go attack a bunch of Bitcoiners. And so maybe they would need to do like multi-sig, keep keys in different places around the world, or other citadels. And it's like a network of citadels. I don't know. So I'm hopeful for that. I'm hopeful that there'll be some countries and maybe some states in the US that are more pro Bitcoin, like the Wyomings of the world, that maybe the Austin has a pretty strong Bitcoin scene. Elsewhere in the world, maybe somewhere like Portugal, or places inside Portugal or near Portugal, maybe Singapore, Malta, Switzerland, maybe some of those really small places, like the Liechtensteins and Monacos and places like that. So it might start more as like, I guess some of them will be more organic in nature too. Mm-hmm. So for example, kind of like the Free State Project, which was an idea amongst libertarians to all move there to influence the politics and kind of all live amongst similarly minded people. The Bitcoin people in the next few years might start doing some of those things. They might sort of, and some of this might be an explicit thing like, hey, let's all move to this country or this area and we'll all set it up and try to make it more like a Bitcoin town. And then there'll be other ones that are just more organic in nature. Like all the cool kids are in Austin. So then all the Bitcoin people want to go to Austin, and then maybe eventually they start setting up their own little citadel and things like that. There's a lot of stuff that's needed before all this stuff is viable though, right? Like you need defenses, you need all these kinds of things. In the meantime, it might be more just like kind of people move into a certain town and influence the politics and maybe try to get like one of our guys voted as the mayor or something to try and like influence the politics in that way. Or maybe like some wealthy Bitcoiners over the next few years, they put money into lobbying, right? To have low tax, low regulation, all that good stuff that we want, like, or zero tax, zero regulation ideally, but you know, you do what you can, right?
Yeah. Yeah, it's kind of like mycelium. I think we need to be as decentralized as possible right now and as organic in nature and sprout up wherever we're needed. And, you know, whoever in the network can go and wants to go will jump to Austin or Miami or wherever it is and turn it. But I think decentralization is great. I think the citadel is more inner than outer, like, but kind of what you were saying. I think you build the physical citadel in the world, but you need that inner citadel first. Well, I hope to see you in Bitcoin 2021 in Miami in June. I hope to see you in BitBlock Boom in August. Stephan Livera, I can't thank you enough. I'm sure it's around noon your time with the 15-hour time difference. I really appreciate you taking the time to come on the Bitcoin Matrix podcast. This has just been a real notch, my belt, for lack of a better metaphor there. I leave it to you for any parting words and, just let people know where they can find you. Obviously, the podcast, but just Stephan Livera podcast, but just front it as much as possible, the website, your Twitter handle. And I just really appreciate it. And any parting words you have.
Yeah, for sure. So look, ultimately, it's a journey. So I would say for a lot of people out there, when you get started, it can be overwhelming, but you need to just start and take a step, right? So don't think you need to go zero to hero. Just incrementally, what's the next step for me to learn about or use and do Bitcoin properly? And so that's kind of the step I would leave, the tip I would leave for listeners. In terms of people who want to find me online, stephanlivera.com and ministryofnodes.com.au are the two main websites. Obviously, I'm on Twitter. If you search Stephan Livera, you'll find me. But basically, my show is there for people to learn about Bitcoin. I try to cover a range of things: technology, economics, mining, Lightning Network, privacy, security. Basically, if it's got some connection with Bitcoin, I'll be trying to interview someone about it. So that's, I guess, the parting note. And thanks for having me on. It's been great chatting with you.
Yeah, this has been incredible. Your show definitely is minute for minute the best show in the space. So I really appreciate it and you sharing your knowledge here. This has been so dope. Stephan Livera, monetary justice warrior on Austrian economics from the Bitcoin perspective, right here on the Bitcoin Matrix podcast. And thank you for listening. If you dug the chat, please subscribe, give a 5-star review, and share with your family and friends that would be interested in learning more about Bitcoin. That's the best way to spread the good word. This is Cedric. Peace.